Hello, everybody, and welcome again to another episode of Wisdom Wednesday with CTI. We have today Jay Jacob, an amazing guest. We have Zia Mohi, our COO, and Gavi, our Q&A queen. So please, guys, if you have questions, please go ahead and type it in all our social medias. We are everywhere, live streaming this right now. So if you have questions, go ahead. Gavi will take care of it. Jay, thank you so much for joining us today. Jay is the CEO of, one second, I have it here, Community Capital Holdings Corp. And then, Jay, for those who don't know you yet, who is Jay Jacob and what led you to launch Community Capital Holdings?
Well, thank you for that introduction, Maria. It's good to be here, and thanks for having me on. I think it's a pretty simple story. I grew up here in South Florida, where I went to the high school in Broward County. Ended up with a career in banking kind of by accident, and decided I liked it almost 30 years ago. It makes me feel very old when I say that, but it's a fact that I have to face. Ended up in banking and kind of worked my way from big banks down to smaller banks. And I was fortunate to be part of a group that sold the bank 10 years ago, and decided after a couple of years working for the company that bought us that I was going to go out on my own. And here we are 8 years later, having originated almost $500 million in loans and growing and scaling, and have gotten involved with multiple businesses, started another bank. So you can basically call me a banking and finance junkie that's focused on real estate, really.
How did you fall into banking?
Kind of a crazy story. I was a senior at the University of Florida. I had accepted a job to move to Chicago to work in corporate finance. And then on my 22nd birthday, my father has a heart attack. He's fine. He's good. He's alive. He just turned 79 a few weeks ago. But it was kind of an aha moment of, do I really want to move, I don't know, 1,500 miles away from my family? So I went back after my dad was stable and went to the Career Resource Center at UF. And I said, I need a new job. And basically at that point in the game, late in the semester, I'm about to graduate. The two industries that were hiring were banks and retail stores like Bird Irons, if you remember Bird Irons, which is a predecessor of Macy's. And I didn't see myself working in retail, so I decided I was going to go down the banking path, and I'm glad that I did, because I look back and I'm glad I didn't move to Chicago and work for some finance company. I'd probably have a very different life.
Fair. It's funny, when I got out of college, I accidentally fell into banking too. And I spent 5 years in banking, and I got into banking in 2009.
Interesting time.
Yeah. So it's for those of you who don't know America in 2009 banking, it's the last place you probably want to be. But I don't want to jump too quick, but how did you manage 2009 and being in banking and committing your life to banking at that point? What did you do?
The financial crisis was probably the best education anybody that was in banking could have gotten. It's way more important in my career, I think, than my undergrad or my MBA was that 2 or 3 year period of time. We saw people who really, really behaved poorly, and then you saw the opposite of that, of people who really came to us and did the right thing, and it really made it very clear to me. There's lots of things you think about in banking as far as underwriting and cash flow and credit, but boy, character really, really started to kind of emerge as the thought leader as to what's really important. If you don't think you've got an individual with good character, you really want to second guess whether you're going to do a deal with that person or not. And 2008, 9, and 10, a lot of bankers found out who really had good character and who didn't. And it was a tough time, but learned a lot. And hopefully we don't go back to those those events anytime in the near future, even though I think we're getting kind of close to it again.
We're getting close, but I'm hoping we learned enough to where we can take a setback, but not that again. That was, let me tell you, as a 22-year-old kid coming out of college and working for a bank that doesn't give out loans, I'm like, I don't understand how we make money. Like,
Right.
well, we're not allowed to give out loans. And then I started, I'm like, wait a second, what is going on? Because I'm a kid, I didn't know what any of that stuff was. And the more I did the math, and I'm like, yeah, I got to get out of this. This doesn't make any sense.
Yeah.
But
3%.
Yeah,
I was the chief lending officer of Community Bank of Broward, which is the bank that we ultimately sold in 2015. And I mean, we really saw some crazy things. I mean, loans that were performing where values just completely halved because of just what was happening in the market, and it was a free fall that nobody saw coming. And we were at that time a very profitable and secure, well capitalized bank, but the the effects that happened and the perfect storm. It really was a true perfect storm. I know people throw that phrase around a lot, but you just had loose underwriting, credit that was available to pretty much anybody, and developers and real estate investors that just made a lot of poor decisions, all kind of happening at the same time.
No income, no credit check. Just so how much do you make? This much. Well, you need to make this much to get this loan. Let's just round it up, huh?
Yeah. And a lot of that happened, and it created chaos in our markets.
Jay, so we were talking a little about banking, and also you do lending, correct? What has the landscape changed? The landscape has been changing these 25 years around lending. What is it about?
It's changed dramatically. So I came into banking, I'm a little bit older than Zio, in 97. And I can tell you that in 97, the environment was a healthy environment. The regulatory environment was one that, allowed banks to actually grow and help the community and help businesses and entrepreneurs do what they needed to do. And I strongly believe that there's been an overcorrection. And I say this as somebody who's still involved with banks. I'm part of a group of founders that started a bank 2.5 years ago here in Fort Lauderdale, and I sit on the board. And I get to still see the regulatory side of what happens with an FDIC and OFR regulated bank. And, it's changed dramatically from when I was 22 years old and coming out and starting to work for, Nations Bank. If you remember that bank, regulations are necessary, but we've really kind of hit a point where banks are not being run to serve their communities and their clients, but really to make sure that they're in line with whatever regulatory guidelines are in place at the moment in time. So that's the biggest change that I've seen. Listen, technology has changed dramatically. People are able to find access to credit through alternative means, private lenders like myself and factoring companies. I mean, there's no shortage of places to get capital. And I think in that 25-year time frame that you described, a lot of that has really evolved, and businesses and entrepreneurs and consumers have many more options that they can go to.
So let me ask you. So you got in 97. I think that's right around the time Glass-Steagall was went into effect.
Right.
How much of a difference did that make in the market versus what happened with the deregulation coming into 08, 09?
Listen, it varies. I mean, I think the bigger banks were impacted differently than the smaller banks. I worked for Nations Bank, which was ultimately acquired by Bank of America, so that's a pretty large bank. It didn't trickle down to the local markets here because that's being run out of North Carolina, wherever they were based out of at that point in time. But it has an impact. I mean, at the end of the day, that's what the banks were basically being mandated to follow, and it really had a huge impact on just the way the banks were managed, capital requirements, credit risk exposure, and it still happens today. I mean, I could tell you that one of the things that we look at on the bank that I serve on the board for is just our real estate concentration, because examiners want to make sure that we don't have too much of a concentration in one area of lending. But as a person who makes a living making loans, I feel pretty comfortable making loans secured by real estate versus things like inventory that have a lot more volatility to it. But the regulators see it differently, right? So that's where you kind of have to look at this from a business perspective versus a regulatory management style.
I could not agree more. But I definitely see where they're coming from, because what they're guarding against, or what they're trying to guard against, is another 08, 09 happening.
Yeah. Yeah.
So they're like, well, if this guy's got 90% of all of his funds locked up in real estate, and real estate goes down 30%, you're gonna end up with the Silicon Valley Bank going down.
Right.
Because, granted, they did a couple of things that they should have done differently, but they never did.
Right.
And it's weird, right? Because you're being regulated by two agencies. One is the government. Two are your shareholders. And I feel like it's such a tightrope to walk. Like, who do I respond to first? Who's more important? Because both of them could ruin us and both of them can make us.
Right. And the answer is both.
Yeah.
At the end of the day, you have to walk that tightrope, and it is a tightrope. And if you look at Silicon Valley, they had some real mismanagement, in my opinion, regarding their asset liability management. That's something that probably should not have occurred. And look, at the end of the day, good management really differentiates banks, right? At the end of the day, all the banks are almost like a commodity. If you go out to 5 different banks with the same credit request, you're probably going to get similar offers. You have slight variation in rate or term. They're not going to be very, very different from each other. But it does come down to the management of that bank and how they're operated, and things like assets and liability management. some banks do better jobs than others. Credit management's another thing. You really have to look at every aspect of it, and it's an important piece of that industry. It's a tough industry. It's a much harder industry today than it was 25 years ago when I came in. And I don't see a lot of young people getting into banking, to be honest with you, which I think is going to be an issue.
When you say banking, you're talking about the commercial side, or you're talking about the retail side?
I've always been on the commercial side. Yeah, the retail side is a completely different animal. My career has always been on the commercial side. I financed commercial real estate and small businesses that need working capital, asset-based lines and stuff like that, or equipment financing. We've done a ton of SBA lending in the past. So my entire career focus has always been on the commercial side of the bank. I don't think I could understand half of the consumer laws that are in place, especially since the Consumer Financial Protection Bureau came into place.
Yeah, I started on retail, and I as quickly as possible moved over to commercial because, one, it's way more fun.
Right.
And I also saw the writing on the wall. There's no money in retail banking.
Right.
The only people who came into retail banks were people cashing checks. Everybody can open an account online. The ATMs, you can make deposits, withdrawals. You can do everything you want in them. And I think Bank of America at a certain point had a free account as long as you didn't use the bank.
Right. I think that still exists, by the way.
Yeah. And so it was one of those things where I see the writing on the wall. I'm like, oh man, you got to get out of retail banking. You're either in investments or you're in lending.
Right.
Because those are high net worth requests.
Right.
So private client will always be there. Investments will be there. And people who need money will always need to be there. So I think you're 100% right. I think you're right. You're lucky you never got into retail. That sucked up 2 or 3 years out of my life that I'm never getting back, but made me better for what I am today, I guess.
There you go. And you said something earlier that I resonated with me, which is the commercial side is more interesting, and it really is. I've told friends who have kids who have entrepreneurial desires, as much as a challenging environment as it is today, get them into banking for a couple of years on the commercial side, because no 2 days are alike. I mean, you're going to spend a day with a healthcare company, and then you're going to go into a manufacturing company, and then you'll be with a professional services company. I mean, you could see so many different industries and so many different, structures as far as, how companies are set up and organizations. You kind of see the good, the bad, and the ugly, and it's a great learning experience for somebody that wants to maybe go out on their own. And I think subconsciously, it's one of the reasons I ended up on my own, is that I saw all this when I was a younger banker, and it prepared me for having to worry about payroll and making rent payments and growing my business and adding new clients and investors and everything else that you don't have to do when you're working for somebody and just collecting a paycheck and a W-2.
And especially if you're on the commercial side and you're entrepreneurial, you'll learn what you need to do behind the scenes to make your company more valuable. When I learned about debt service ratios, I was 25, and I'm like, what is a debt service ratio? And then you find, is that their ability to pay it back? And I'm like, well, okay, how do we do it? At a certain point, we were coaching clients. Hey, you need to make these changes on your taxes, on your P&Ls. You have to do this. You show this on your balance sheet, so you are more lendable.
Right.
Because at the end of the day, small business owners are trying to do two things. They're either trying to borrow or they're trying to not pay taxes. So we're like, well, listen, you got to pay some taxes so we can lend you some money. If you don't want to pay taxes, I can't lend you any money. So
I've had that conversation more times than I could count at this point. So my main business is our private credit business, where we lend money directly. But we have a second business that we started about 5 years ago, where we act as advisors for people that are looking to borrow money. I have that conversation a couple times a month, even today, with people that are going, well, I make all this money. Yeah, but you're not really showing all that money. I can see that you have a tremendous lifestyle, but you've got to make that decision of being a little bit more forthright with what you're really making and paying the applicable taxes, and just doing the right thing and borrow money and then grow your business. Or you could keep going down the path you're going, and you're never going to be able to borrow money and leverage, and you're hampering your ability to scale and grow by doing it. So it's very short-sighted. And I would tell you that 9 out of 10 people that I have this conversation with, they see the light and they modify their behavior and maybe don't run as many expenses through as they have historically. But you got to.
We're talking a lot about,
for sure.
Sorry, we're just talking a lot about traditional banking, and lending. What about crypto mortgages and lending? Are you familiar with this? This is something that is evolving a lot with cryptocurrency. Are you familiar with it? And how is, Capital Holdings, getting ready for this?
So yeah, there are some folks out there that are utilizing crypto for lending. I can tell you that it's not as widespread as some may think. I mean, I've seen developers who've advertised and marketed that they would accept crypto for payments. we don't mess around with it at all. There's way too much volatility in the cryptocurrency markets. I think the blockchain technology that's underlying there is exceptional, and I think it's going to change real estate in the next 10 years. Title companies, I think, have to keep an eye on that, because ultimately what the services they provide through title insurance essentially could really be either augmented or even completely replaced with blockchain technology that is able to provide that chain of ownership and deed to the real estate. But as far as crypto directly today, I think there's going to be a little bit more time before that really becomes widely adopted. Really because of the volatility. I mean, whoever's receiving that is really receiving a lot more risk than I think is warranted in today's world. Now, if we ever get to a point where we're using crypto for some sort of reserve, then you have more stability, then I could see that happening. But in today's world, I mean, a few months ago, Bitcoin is at $75,000, and now I think it's at 115 or something like that. So that's a pretty big swing.
Are you guys lending against it?
No, it's same reasoning. I mean, listen, there's issues with making sure you're able to know your customer and document where the money is coming from. I'm here in South Florida. Z, I know you're here as well. I mean, South Florida is a hotbed for fraud and people doing bad things is probably the best way to describe it. So we can't really deal with that. We've got to make sure that we're dealing with people that have clean money, and there's not any question as to money laundering and other things that could be out there. So we don't, and same thing, banks are staying away from it. I'm starting to see some banks that are allowing people to at least bank with them when they're in the crypto business. But up until recently, even just having a bank account with currency like regular dollars was problematic for somebody that was essentially a crypto based company.
Yeah, I think we saw this in the marijuana industry 4 or 5 years ago.
Yeah.
Now I see a lot of banks are open to it.
Yeah.
POS systems are not there yet. They're still not accepting payment because I think it has to be accepted federally before they'll do it. But I think local banks are okay with taking deposits on. The problem is it's very cash intensive.
Right.
So that costs the cannabis industry a ton of money just for just doing business in cash. But now they're open to it. I feel like crypto will be the next turn that comes.
Right.
But it's funny that you brought up South Florida being like a interesting market to be in. One of my clients is a pretty big law firm in Palm Beach County, and one of his biggest frustrations was you brought up title companies, and he goes, the easiest way to wash your money, and he goes, because we see it happening left and right, he goes, they'll come and buy a $20 million property on the water. They let it sit for 1 year and then they sell it. They don't care if they make money or not because nobody checks where the money came from.
Right.
But once the money's been here for a year, it's clean.
Right.
So then they take their money out, they do whatever they want with it. So it's literally like a 1 year wait to wash $20, $30, $40 million. Yeah. He goes, if you look at all the houses on A1A in Palm Beach County, most are uninhabited because that's just what happens. He buy it. And I'm thinking to myself, I'm like, wait a second, you're an attorney, you know this. And it's just like, yeah, it's just business as usual, BAU.
Yeah.
I was like, all right. So for those of you guys who are not in South Florida and you're watching this, there is a lot of things you have to be careful of in the South Florida market compared to the rest of the market. Right. And if you guys don't know the story about how banking started in the city of Miami, that is an excellent story for another time. But let me tell you, it was not legal or it was not pretty.
Right.
So,
okay, so we have a good question here for Jay.
Sure.
So if you were starting over today, no network, no capital, what will be your first move?
My first move today, if I was starting all over, I'd probably try to find some very wealthy partners. I mean, I've come to realize how important it is to leverage people with means, and it's easier said than done. I could tell you that today I've got the good fortune of having some, pretty affluent people that support, our endeavors here. And I think that's because of having 30 years of experience in a market, and you can't, you don't have that when you first start out, but certainly identifying, good people to work with. And it could be, just finding a good mentor. It doesn't have to be financial backing. It could be somebody that believes in you, is willing to support you. But that's something that I think is very important. And I stress that we have interns that roll through our company every year. Several of them come through, and we really try to impart as much knowledge as we can because we understand how important young people coming through and understanding how, the real world operates. Because you've got, theory when you're in undergrad, and then you actually see what gets done in practice. And, so you talked about debt service coverage. It's interesting. I've had multiple interns tell me that they realize now what that really means. They've learned about it in their finance courses, but now they see it in a real world application where you're trying to size out a loan based on what the income is. And, it becomes way more practical.
Mm-hmm. I agree. And if you're asking me, if I had to start over today, I would probably try to find a business that is not doing so good. Try to buy it using Jay for capital, obviously, having him maybe run a loan to help me buy that business,
Right.
and just put blood, sweat, and tears into fixing it. Because so many businesses out there today are absentee owner. And if you have a good head on your shoulders and you're willing to work hard, instead of going to work for somebody, go work for yourself. Like if you can find a sandwich shop, you can probably pick it up for $40,000, $50,000. And the owner's never there. You show up every day, you make the sandwiches, you get the sales up to $150,000, $200,000 a year. You can sell it for over $100,000. The next thing you know, you've made your first $100,000. Now you can go buy another business.
Right.
But there's so many ways to be successful. It's just sometimes you got to get out of your own way, and don't be scared to ask for help.
Yeah, and don't be afraid to fail either. I mean, you hear that cliche often, but there's something to be said for taking those chances, and you want to take a calculated risk. But I mean, I could tell you that 8 years ago, when I told my wife I was going to leave my job, which was a pretty cushy job, to start my own business, she thought I had potentially started a midlife crisis, and thankfully I had not, and it was a well thought out decision. But you've got to take those chances, and I did it in a stage of my life where I could afford a couple of missteps and still be okay. But take those chances, work hard.
Awesome. Jay, what do you see are the biggest challenges and opportunities right now in real estate for South Florida?
Sure. I mean, the two mainstays that have been around for some time now are both real estate taxes as well as insurance. That's been a problem. We're seeing some relief on the insurance side. I've talked to several investors recently in the last 30 to 60 days. Was on a podcast a couple of weeks ago with Jerry Katz, who's an insurance broker here in South Florida. I think, Zia, you may know Jerry. By being prepared and by shopping around, you can definitely save some money there. But that's been an issue in Florida. And I can tell you it's getting worse because what's happening is you've got these increased expenses for insurance and taxes, and you are seeing some rent compression. I monitor what you're going to get, whether it's office or industrial or retail or multifamily, and things had really flattened off, and now we're starting to see a little bit of compression. So you've got rents that are either going down or flat, and you've got these increasing expenses with taxes and insurance, and then start throwing in things like labor and raw goods and inventory when you're for an operating company with these tariffs. Margins are getting smaller, and that's going to put some pressure on value. So we're anticipating, when we're underwriting a deal today, we are anticipating the values to potentially come down a little bit, and we're taking a very cautious approach because rents took off. If you look at what happened in rents in any asset class in South Florida from the beginning of COVID, from 2020 till today, they kind of did the hockey stick, and now they've come down a little bit, and it's very, very flat. And so, depending on your timing of when you acquired a property, you could have a little bit of an issue. We're fortunate here in South Florida that we still have, I think, positive population growth, and there are people that are starting new businesses or coming down here. Citadel from Chicago came down to Miami, and they've made a huge impact on South Florida. As long as we continue to get these high income earners here, I think we're going to be okay. But I think the boom is over, and now it's really more of let's just kind of have a little bit of a stable environment for a little bit of time.
All right. So you say you think it's going to get stable. There's two things that are coming up that I think could disrupt and hockey stick it all over again.
Sure.
I'd love to hear your thoughts. Right now, the governor's talking about removing real estate taxes.
Right.
He'll probably settle on homesteaded properties, and probably not all properties. But if he does that, you're talking about it's a 2% savings across the board for anybody who owns a property.
Right.
That could reflect almost directly into the cost of the home.
Yeah.
Then the other thing is there has been an ongoing fight. You can just see it every day if you watch the news with Powell and the president about what they're going to do with interest rates.
Mm-hmm.
If interest rates drop, just supply and demand, you're going to see real estate go back up again.
Yep.
Now, as somebody who's trying to move from Weston to Boca,
right,
I don't want to see the prices go up anymore in Boca. It's killing me. But
right.
What can we realistically expect another spike in real estate, or do you think it's actually going to settle down?
So one of those scenarios I think is more likely than the other. I think that as much as Governor DeSantis wants to get rid of real estate taxes, I certainly don't think he's going to abolish taxes across the board because of how much that brings into the state or to the local. I mean, really, the taxes essentially get distributed to the municipalities, the cities and the counties. But I think there's really no path to replacing that income, that revenue. I mean, you'd really have to increase sales taxes, I think, is the only other lever that you could pull there. And I have read and heard that, now he's maybe considering trying to deviate from everything, getting their real estate taxes removed to homesteader properties. Listen, if it happens, it's only going to increase values, right? I mean, listen, I know people that own homes that have doubled and tripled in value, but they're landlocked in this home because they're let's say you bought a house for $1 million, you're paying $20,000 a year, but your house is now worth $4 million. Well, that's an $80,000 tax bill using the 2%, which is the average millage. That person, even with portability, they can't afford to have that huge, $60,000 increase. So I know people that are saying, I can't move because if I move, I'm going to go up to this because my next door neighbor bought a house and he's paying $100,000, I'm paying 20, right? Like that's a real life scenario that happens in Weston and in Boca and everywhere else. So not only is it going to put those, the $20,000 you're paying back in your pocket, but it's really going to get people off the sideline that are going to say, I've got all this equity and now I'm not going to get penalized for moving. So if that happens, it would have a huge impact. Would it happen? I think there's less than a 50% chance it happens. I just think there's too much resistance as far as replacing that revenue. I hope it happens. I mean, as a guy that owns homes and lends money, I think it'd be fantastic. There's a huge amount of friction between, President Trump and Jerome Powell. I think that where rates are today, it's certainly stymieing housing. But one thing you have to keep in mind is that if you look at the cost of a mortgage today, it's still on the very, low end of the spectrum of, say, 30 or 40 years. We got very accustomed to rates that were lower than they should have been. I mean, I know people that have locked into residential mortgages at 2%. I mean, 2% is free money. You can earn 4% in a money market account today. So, the fact that you were able to borrow money in 2020 for 2.5%, that's an anomaly. That shouldn't have happened, but people got very accustomed to it. Like I said, rates today are still very low. We are not residential lenders, but I follow where residential pricing is, and you can borrow money, in the sixes. To kind of put that into perspective, when I bought my first home in 2000, I think it was 2000, I borrowed money from the bank that I worked for at the time at 8.5%. And that was my special employee deal. And that was a good deal. So today people are complaining about 6.5%, but 25 years ago, 8.5% was an amazing deal. So you kind of had to put things into perspective. And I'm not old enough to remember 18% mortgages, but that existed in the 60s and 70s as well. But yeah, listen, that'll come down. It has to come down. I think there's enough pressure. And I think Powell's term might be up in the next 12 months, if my memory serves me correctly. So I presume that President Trump will appoint somebody that will be more aligned with his agenda. As a real estate professional, a man who's built, a pretty significant net worth on real estate, I think he's got, that industry, firmly in his crosshairs.
I have to agree.
Jay, so we're talking a lot about the past, like all these crises and everything. So what about the future? How do you see the future of, young professionals trying to be involved in finance and leading in real estate? What do you see is going to be that future?
So, I mean, everyone's talking about AI. Huge impact on every industry, but I see it particularly in finance and real estate. I mentioned earlier that I have interns that are coming through here all the time, and I used to think of myself as a relatively smart individual until I came across a couple of these kids who can run circles around any of the old fogies in this office. These kids are really, learning and coming into the job market in an extraordinarily exciting time. They're going to be way more efficient. They're going to have the ability to make quicker decisions than we had. The information that's out there. I mean, I've had interns that have never been on a site doing a site visit who can come up with a better analysis than some of my employees who were in their 60s, because they're able to pull things like CoStar comps and LoopNet and public records, all from going on Google Earth, looking at a picture, seeing what the property looks like today, what it looked like 5 years ago, 10 years ago. The technology is amazing. So these younger people, the ones that work hard and are willing to put in the time and effort, are going to have tremendous futures ahead of them because of the tools that are going to be at their fingertips, and also because of their ability to understand it all. I mean, I'm old enough to remember when people first got email addresses. I remember being, a freshman, I think, in college when somebody asked me if I had gotten my email address, and I had no idea what he was talking about. Today people, you couldn't live without our phones and our laptops and our computers, and now with AI, I mean, when it first started coming out, I didn't understand, the impact it would have on our business, but we use it every single day.
All right. So Jay, you brought up something earlier that I want to tie back into what you just said.
Right.
And so what I've noticed is we are placing people from, 18 years old to like 78 years old, right? All across the spectrum. And you brought up something earlier is when you give out a loan, the character of the person is as important as all the numbers on the paper, right?
More important. Yeah.
With that being said, with all the young kids coming in, they're so good at technology. They're so good at their computer screens and doing all that stuff on the back end. How do you feel like, do they have the ability to read character and make those decisions? Or do you feel like that's an area to where our generation, and I'm going to lump you in together with me because I feel like I'm older than I appear.
Right.
But how do we teach this generation the people skills, the interpersonal skills that are clearly lacking? I love the Gen Zs. I love my kids, but yeah, there's something missing there.
Yeah.
They're a couple French fries short of a Happy Meal on getting those things right. So.
Listen, it's a problem. I have younger people that work in our organization, and there's a learning curve there. There's a little bit of a disconnect. Some of their strengths are strengths that I don't possess, and unfortunately, the human, understanding and the ability to connect and really, the social aspects are probably a little bit more lacking in younger folks. Listen, I think that comes with experience. I mean, I remember, being younger, not having the confidence or the experience of being able to figure things out. I think that these younger folks are going to come into the workforce, and I think they're going to have to hopefully, learn a thing or two from the folks that are more experienced and seasoned. And it really will come from being out in the job market and learning, because it's a deficiency. I mean, I think it's like a culturally accepted fact that there's a little bit of a deficiency with, everyone kind of walking around with their heads down, looking at their phones. I mean, if they don't get hunchbacks, they're certainly going to get the inability to have a conversation. And I have a teenage daughter, and I see it, with her and her friends. Sometimes they just have a hard time, communicating very simple things.
So what you're saying is I should go into chiropractics, fix all these hunchbacks that we're going to have in a couple of years. I got it. Okay, perfect.
I think there might be a business there. I'll finance it for you.
All right. So the other point of this that you brought up, and it's something that kind of like it really hit home, was using AI to enhance the business. Like, I know for us, there are a million tools out there, and I know we use them every day to where we're able to plug in a job description and a resume, and it will tell us whether or not this is a good candidate, why or why not.
Yeah.
On your side, are you guys using a tool or anything like that where you can just plug in all the information and then it will spit out the answer of this is a good loan, this is a bad loan, you need more information, take a look at this, any red flags? Are you guys using anything like that right now?
Yeah, we're developing some stuff right now that essentially is going to allow us to have a Dropbox, for lack of a better way to describe it, have a bunch of documentation, have, a large language model go in there, extract all the information, do an analysis, provide a summary, and then provide a suggestion. We use it all the time for things like, for instance, we constantly have contracts and legal documents that we have to review, and we have an in-house attorney who is very, very good at what he does for a living. And I could tell you that I could pop a contract into one of our AI tools and have it spit out a summary and any kind of red flags within seconds, where it may take a day or two for our attorney to look at it. And similar work output, obviously the attorney may pick up more things and is a little bit more comprehensive, but if you just need a quick analysis of something, I recently had association documents for a property that we were considering investing in. It was a 100-page document. I spit it in, it came back with everything we needed to know. It was exceptionally efficient.
Yeah.
So yeah, we are using that, but we're working on developing some stuff that will allow us to, have it take a look at all the data that's available to us, as well as data that's out there. I mean, what we do primarily is real estate lending, and a lot of that information is in public domain, so we can see what properties traded for, if their taxes are paid, what their comps are, and have it do in a matter of minutes what we now take a few days to do. So it's going to not replace, but certainly enhance what our process is. It's an amazing time. When we started making loans, we would have to get in the car and drive to 123 Main Street to look at it. Now, if you gave me an address, I throw it on my computer screen, and I've got 5 people all looking at it, and we could see exactly what we're talking about in a matter of seconds without having to get in the car or out.
And don't forget about the old maps. So
Yes.
difficult to read, like you remind me, I was having a conversation with a friend and he was showing me the old maps, like the books. He was like, try to find the address. And I'm like, no way. Like, we'll be so lost. Like, I need my phone right now. It
Right.
was super funny.
But there was a time
Yeah, we
and
have a
place when we
question.
all
Yeah.
drove around with maps in our cars because that's how we got around.
Gabby, you want to go ahead and do the question?
Yeah, we have here one, changing a little bit of topic, but Jay, if someone brought you a deal today, what 3 things will you ask them right away?
If someone brings me a deal, it's going to be, I need to understand the sources and uses. So I need to know what the money is going to be used for and what they're contributing as far as equity, what they're trying to leverage. That's a pretty important piece because you need to make sure that it makes sense. I would want to understand their experience, as to, we finance all kinds of stuff. I mean, our primary business has always been real estate, but if somebody wants to buy, the chiropractor practice that Zia is talking about, we want to look at, what their ability to actually do this is. Do you have a degree in this? Did you run one of these before? So we look at their experience, and then we look at, what they project as far as, the next 5 or 10 years. We really want to see that they have a plan. You never want to lend money to somebody that is coming to you without a well thought out plan that they can execute upon. If it's I've got my fingers crossed and I've got hopes and prayers, probably not the best candidate to lend money to. So what the use and of the cash is or the capital is, what the source is going to be, what their experience is, and what their plan is going forward. Those are 3 pretty basic things we need to know right out of the gate.
A goal without a plan is a wish.
Yes, that's correct. Yes.
Yep. Jay, so what would be one advice you would like to give yourself 15 years ago that you will think all young generations that want to go with this career should hear right now?
I would say give back more sooner. I've gotten very involved in mentoring people, bringing these interns, giving back from a charity and philanthropic perspective. Doing things like, speaking engagements where you really are trying to impart education and inform people. And I think, when you're younger in your career, you just got your head down and you're trying to grind it out. But I think by giving back, you get so much more in return. And I'm not talking about monetary. It's just, the rewards of helping people, seeing people succeed, taking chances on people. So if I could have, go back in time 15 years ago, I would have told, a slightly younger and less gray version of me to give back as much as I possibly could, because that does make a huge impact. It's really what our lasting legacy, I think, is going to be.
Zia, your advice? You have always good advices.
For me, it's there's 2 things. For me, it's improve your network as much as possible when you're young. It's the people that you associate yourself with in your 20s and 30s that create the larger network, the larger net worth you're going to have in your 40s and your 50s and your 60s. So that's one. And then 2, be so careful with your time. Be careful who you're investing your time in. I can't tell you how many times I've spent hours and weeks and months trying to help people. I guess it's the exact opposite advice Jay just gave, but it would be like, where am I investing my time, and knowing when to cut your losses on a debt investment. I managed teams, and I spent way too much time with people that had no business with even a minute of my time. Right. So be very, very careful with your time and invest it in the people that are going to when you invest in them, they're going to reciprocate and put it back into you tenfold.
Okay, can I ask the last question?
Sure.
Okay, so has there been a moment when you took a big risk and it really paid off?
Yeah, when I started my company, I had zero reason to do this. I had, I think I managed 130 people when I left. I was running a market that had over $2 billion and under in our market. Wore a suit to work every day. It was a great, cushy job. But I just felt like I could do more and make a bigger impact doing something differently. And it was time for me to, have a little bit of a a change in pace. It was a huge risk. When I tell you that my wife really thought I was having a midlife crisis, she was really concerned about me, and I was pretty confident that I was going to pull this off, but I couldn't tell you that I knew for certain. So it was a big risk, and I do, I talk to friends all the time who are thinking about making that switch from being an employee to becoming an entrepreneur, and I think you have to do it when it's the right time. I was 40 years old or so, or 42 years old when I did it. I think that if I did that same thing when I was 32, I wouldn't be as successful as I am today. So you have to kind of trust your instincts and take the leap when you're ready to, but you have to do it. You can't talk about it. I had a very good friend of mine who kind of gave me a piece of advice that stuck with me. He said, if you don't do this, you're gonna end up growing old and you'd be that, old banker sitting in an office tower someday, wondering what your life would have looked like if you hadn't done it. If you do it and you fail, at least you took the chance, right? And so that was one of the catalysts that got me to make the move.
Jay, and the last question that we always ask our guests, is there a podcast, a book, a mentor that actually just shape of the person who you are right now, or somebody that inspire you to do this?
I've gotten really, and I'm sure you probably have heard this often because I think it's pretty popular. I listen to Andrew Huberman all the time because I've been putting a lot more of my emphasis. I don't know if you know who he is, but he's a neuroscientist who teaches at Stanford. He's got this podcast that's all over Spotify and Apple Music. It's called the Huberman Lab, but it's because it talks about taking care of yourself, your health, both physical and mental, your relationships. And they're great. I mean, they give you these amazing tidbits. I usually listen to when I'm working out, so it kind of adds a little bit of inspiration when I'm trying to work on my health. The older you get, the more you realize, having a bunch of money isn't everything. You want those relationships. You want to have good health. You want to have things that may not be monetary. It's the other intangibles in life that are way more important.
Awesome. And then, Jay, we always do this with our podcast just to finalize. We have a quick 3 questions. You can say yes or no, and that's it. Lucia, you're also part of it. So, Gabby, let's go ahead.
Yeah, it's more like, what do you prefer? So, long-term investing or short-term flips?
Long-term investing.
Sia?
Agreed.
Cash flow or appreciation?
For me, it's appreciation.
Sia?
I like cash flow.
South Beach condo or Fort Lauderdale duplex?
Ooh, I think I would do South Beach condo.
Only because I know what's happening in the condo market right now, especially in Old South Beach. I'd have to go duplex in Fort Lauderdale. Give me the ground. Give me the ground.
Okay, private equity or traditional banking?
Private equity, naturally.
Even though they are ruining a lot of things that they touch right now, they're still doing some good.
Yeah.
Okay, and the last one, risk taker or play it safe?
Today, I think risk taker.
It's the time for it. It's
Yeah.
prime.
Yeah, there's going to be a lot of opportunities coming up. So if you're thinking about taking a risk, now is probably a good time to do so. Those folks that didn't take action in 2008 and 9 when Zia was a young banker, you probably look back upon that time and wish you had bought some things.
I put in my entire 401k. I put it in a QQQ before I left banking in 2011 or 12.
Right.
I can almost retire on that. That was maybe like 25 years old worth of stuff. So it's what does not Jimmy Buffett, Warren Buffett say? When people are being greedy, be conservative. When people are being conservative, be greedy.
Yeah.
I think it's something close to that. That is one of the best right now. Everybody's being stingy. Everybody's being a little more cautious. This is the time to jump.
Yeah. And there
Awesome.
are opportunities out there.
And if you need a partner to do that with, I know this guy named Jay that could probably help you out with it.
Yes, please go ahead and follow Jay on LinkedIn and also his amazing company. So go ahead and do that, and also all social media. Thank you so much, guys, for today's webinar and live podcast. Thank you, Jay, for your insightful conversation and all your history and background. That's amazing. Zia, as always, thank you so much for your advices and comments. And Gabby, thank you for taking care of questions. Stay tuned. We have more webinars coming soon. Next Wednesday, I'll say, well, today's Thursday, but next Wednesday, we'll have another podcast. Thank you, Jay. Thank you so much for joining. Till next time.
Thank you so much. I really
Guys,
enjoyed the conversation.
pleasure.
Thank you, guys.